Hello, everyone, and welcome to Pearls of Fisdom with Nirmal Bang. I'm Avan Dabaj. Now, bhujia, namkeen, papad, among others, we love snacking. And there's a Bikaner-based savory snack maker, Bikaji Foods International, that was founded in 1987, that is now the third largest ethnic snacks manufacturer in the country. In fact, it's also got an international presence, and they are selling Indian snacks and sweets across the globe. It's the second fastest growing company, in fact, in the Indian organized snacks market. So let's understand their business, talk a little bit more about what the prospects are and where it's headed. Manoj Verma is the Chief Operating Officer at Bikaji Foods and now is joining in. Thank you so much for taking time out. And I think I want to start off by just talking about what a lot of the analyst community has to say. The fact that we are seeing a rapidly expanding Indian savory snacks market in India. You are the third largest player within the organized ethnic snacks market. Can you tell us a little bit more about what is making you stand out as a leader and what the trajectory is growing in this business?
Thank you so much for inviting this call. Talking about the snacks industry per se, so this has shown very promising trends for last several years, and Bikaji has been successfully leveraging those growth opportunities. Earlier, till few years back, we were more concentrated on few states, but now this journey has begun, and now we're expanding into the other corners now, and that's what is a part of our strategy, which is helping us deliver this faster growth, faster than the category growth.
If we could dive into financials, because there has been a decent growth that you have witnessed in the quarter gone by. Despite the inflationary challenges, you have managed to maintain your volume growth. What has led to that?
That's what is our plan. We would continue to deliver these kind of growth. That's how we and our team is set for. In terms of our back-end capabilities, we have got our plants, our facilities across, and on the front end as well. There's a lot of deployment, feet on the ground, getting infrastructure right. Those are the factors which is really helping us to catch up with this growth momentum. Also, I think the kind of product innovation, the variety, and the range what we have. And besides just nationally, we also are strong players in the categories like papad. We are the second largest manufacturer of handmade papad in the country. The other is the sweets as well. So the portfolio becomes much larger, which enables us to get a better footing in the grow in the store. Another stuff in terms of creating demand or generating offtakes. Amitabh Bachchan happens to be our brand ambassador, and that's where we invest on our ATL activities as well. So that support or complements the efforts what our team do on the ground.
So at the operating level, you have seen your EBITDA increase a marginal 3%. What is the outlook on your operating performance?
So yeah, in this oil prices, not only for us, I think for the industry has impacted, and I'm sure this would adversely impact, but to certain extent only, because there are lots of operational efficiencies which we as an organization look at it so as to make up for these the challenges or unforeseen challenges which comes across. But I think we will be able to to maintain and manage going forward. That's where we are.
If you could break it down for us, because it's the ethnic snack segment that contributes nearly 64% to your overall revenues. You've also got the packaged sweet segment, which is about 17.5%. What is the outlook when it comes to Western snacks in terms of your overall revenue pie, and how do you see each of these segments performing?
So sweets for quarter two and quarter three putting together is the key months for sweets. However, if you look at snacks, this is round the year kind of stuff. So at an annual level, if we look at bhujia and namkeen, so which is the traditional snacks, contribute to about 66-67%. Western snacks is about 8%. About 12.5% comes from our sweets portfolio. Then is about 7%, 6% is papad, and then the balance is some other categories which are frozen cookies and some maida stuff, handmade stuff. So that's the breakup. However, in quarter two and quarter three, contribution of sweets is relatively high. So that's what it is, because that's where the seasonality impact is. And in terms of growth, all of them are, more or less in the same line, except for Western snacks, which is a smaller portfolio as of now, but we have invested behind building our capacity, and hence is on a higher upwards of 20% growth is what Western snacks would be delivering.
You also entered into the quick service restaurant or the QSR market with an investment of about 131 crore rupees, acquiring a 53% stake. This is in Hazelnut Factory Foods. Can you tell us a little bit more about what this acquisition brings to the table for the company, and what the plan is within this space?
So that's very small, if you compare with overall Bikaji portfolio versus Hazelnut, and those are our futuristic plans. When we speak to the street or speak to you guys on the growth plans or the projected growth, we don't incorporate these inorganic growths, no, for now. But I think over a period of years, say next 3 to 5 years, you will see substantial business coming from these, verticals as well. Now, Hazelnut Factory is primarily into sweets, and this is artisan sweets, so which is the premium sweets, like the kind of sweets what we sell, which is say son papri, rasgulla, gulab jamun, which is, say about 200 rupees a kg kind of a realization, vis-a-vis what Hazelnut Factory would be doing upwards of 2000 rupees a kg. So that's the kind of premiumness this brings to the table. And going forward, there will be quite an expansion in these stores as well. So that's what it is. And the investment what we made in our frozen factory last year is gonna complement these kind of investment to accelerate their growth in future.
Sure. So, would you be open to the possibility of listing the QSR business as a separate entity in the long term? And are you looking to even create this sort of house of brands under the QSR domain?
So yeah, that's one thing which we are looking at. So definitely, no, we will be evaluating as a house of brands, right?
You also are looking to double your exports business, I understand, over the next 3 to 4 years. And currently, your exports contribute about 3.5%. How do you see that, portion of the pie growing?
So currently, it contributes to about 3.5% to our business, and in next 3 to 4 years, what we expect is that this should be almost double for what we are doing now.
And what is your current capacity utilization, and how much could it go up by?
So currently our capacity utilization is about 45%, and the kind of growth what we are projecting, volume growth about 13 to 15%, what we believe in next 4 years is what, we should be about 70 75% of utilization. Until then, would not need any major capex for that reason. So, in other words, or put it simply, the capacity what we have created for ourselves could help us double our value numbers what we are today. So we are future ready in that context. And it's only after 4 years is what we would be looking at some other capex, major capex investment. During this time, whatever little would go behind, say maintenance or some NPD development kind of a projects, whatever comes up.
And are you open to any inorganic opportunities in terms of acquisitions? What is it that you're watching out for in terms of, funding and acquisitions?
Yeah, we certainly would be. See, ours is a very cash generating business, and so therefore, which brings lot of cash. We would be open for such kind of acquisitions if something very good comes to us. But would look at, that how does it, synergize with what we are doing, and we would not be looking, any acquisition to get or to enhance our capacities kind of stuff, because we any which way our capacity utilization is low. So we would look at that if any brand can get us better distribution or some, strong footprints in any of the state, we would evaluate those kind of.
Sean, before we let you go, could you leave us with some pearls of wisdom? Any advice on running a business this successful in a very competitive sector?
Not really. See, all I can say is that this snacking business is picking up. If you compare, index it to overall country's foods growth. So this is one of the fastest growing in that space. The only watch out is that you have to be very particular about the quality, because the business is on repeat consumption. So it's not one time. So if your product is liked, you will see the growth opportunities, the multiple consumption occasions creation. That's what we do, and this is what now I look at even going forward, that this has to be taken care of, and this would be the key factor going forward also.
Great speaking with you. Thank you so much for taking the time out. It's been a pleasure.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.